You are about to hear How I Made a Profit Trading the Nicolas Darvas Way by Steve Burns, read by Jason Mccoy. This book is dedicated to my stock trading mentor, Nicolas Darvas. Although I never met him, he has taught me more about stock trading and investing than anyone else. I hope this book does justice to his investing principles and memory. On the afternoon of January 4th, 2008, the Dow Jones Industrial Average fell to 12,800. From the price action of the market, I decided to take all my investments out of stocks and put them into cash. I had been selling out of the market during downtrends in late 2007, but something was different about this action. Money was flowing out of the stock market at a faster and faster pace. The decision to move from equities into cash enabled me to keep my profits from the 2003 to 2007 bull market, which had grown my accounts to $250,000. I was able to keep my profits through the market collapse that ensued in 2008 and 2009. This book contains the lessons I learned from the books of legendary investor Nicolas Darvas, which enabled me to accomplish this feat. Hopefully, they will help you through the turbulent times that no doubt lie ahead. Introduction. I wrote this book to explain how Nicolas Darvas made $2 million in the stock market. His books do a great job telling his story, but he does not use the same vocabulary as the modern stock trader and investor. Darvas invested in stocks which had the best relative strength in the stock market. He practiced risk management through his stop losses. He was a growth investor. He did not know it, but he was a trend trader before the use of the word entered the trading world's vocabulary. Nicolas Darvas was able to control his emotions by avoiding live trading altogether. He put in his buy stops and trailing stop losses when the market was closed. By trading after hours, he avoided the adrenaline rush of making decisions while the ticker tape was running and while live quotes were available. The ability to control your fear and greed while investing is one of the most difficult things to do. He was a system trader, following predetermined buy and sell signs. The system he used to trade made it possible for him to remove his ego from trading and simply work his system. As a trader, you must distance yourself from the wild emotional swings that characterize some traders, who need to be right for the sake of their egos. Instead, you must adopt the mindset that it is simply your system that did not work, and that you will work on your system or trading rules after the market closes for better performance the next day. The Darvas method is very similar to Richard Dennis's legendary Turtle traders of the 1980s. Some of the most successful traders in the Turtle program became millionaires. Many of the top Turtle traders manage millions of dollars successfully to this day. Like Darvas, they bought at new highs and went short at new lows, which were made during specific, predetermined time periods. However, they traded commodities, not stocks. If Nicolas Darvas had been alive in the late 20th century, I have no doubt he would have made millions in the internet bubble by investing in Yahoo, Amazon, Microsoft, and other high flyers. I also have no doubt he would have been in all cash by March 2000, with millions in the bank, unable to find any stocks making new highs. I also know he would have been in Apple, Google, and Research in Motion in the early bull market of the 20th century, as these stocks doubled, tripled, and went up 5 to 10 times their original prices. While I write this in June 2010, the stock market is at a crossroad. The Dow is hovering around 10,000, and the market is growing volatile again. I would like to see this book in the hands of investors and traders who are preparing to become millionaires during the next bull market, which will sneak up on everyone. You will likely get a glimpse of the next monster stocks as I did in 2004, seeing an early BlackBerry and hearing about iPods. At that time, I was unable to identify these products as the creations of explosively fast-growing companies. I had not read Nicolas Darvas's books at that time. I would like my readers to be able to check the company's stocks of products and be able to determine if they are good stocks for investment purposes. Are they at all-time highs? Do they have high expectations for earnings and sales growth? When should you buy them? When should you sell the stock once you buy it?
Sample complete. Ready to continue?